This Fleet Equipment Unscripted interview is presented by Hendrickson, a leading manufacturer of heavy-duty suspension systems and components to the global commercial transportation industry. Visit hendrickson-intl.com to learn more.
Hi everyone, I'm Jason Morgan, Content Director for Fleet Equipment, and welcome to Fleet Equipment Unscripted. Today we're talking with Kenny Vieth, President and Senior Analyst at ACT Research. Kenny, great to see you.
Great to see you as well, Jason, and good morning, everyone.
So it must be that time of the year again, my favorite time of the year, where we break down the market, the year that was, the year that will be. Really excited to talk with you. So let's just kick it off like we usually do. 2023, can you make it make sense for me? Because I feel like, at least for the layman, this was the year we just gave up figuring it out. Was there a recession? Is there a recession? Is it a soft landing? What kind of landing? What happened in 2023?
So economists were wrong. I think I think there was generally a failure to appreciate how much cash was left in the system, how much wealth was created over the course of the pandemic, and really how much pent-up demand there was in the consumer economy. So instead of going into recession in the first half of the year, we grew at 2% through the first half of the year. We just saw the revision to third quarter GDP up at 5.2%, otherwise, from an economic perspective, it was a great year. If you were a trucker, not so much, because a lot of that economic growth was a shift from consumer spending on goods to consumer spending on services. So we spent a couple of years sitting on our couches buying goods at Amazon and various and sundry places, and we didn't get to go to concerts or ball games and so or vacation for that matter. So we took full advantage of that over the course of 2023, much to the chagrin of carriers who were in the process of buying an awful lot of equipment.
Right. Well, and if we can talk a little bit about that, right? Because the pandemic, I mean, we've gone through this massively historic thing, at least for our lifetimes, right? This will be something they put in the history books. We look back on, we're about 3 or so years removed from the start of it, and we've just seen the impact continue. From the market perspective, or even supply chain perspective, what do you all see about the pandemic? How do you talk about it in terms of your predictions, your forecasts, your historical analysis? What does it all mean from that market point of view?
Well, I think we, in my opening salvo, I touched on, the tremendous amount of wealth creation that occurred. Not just the government, over the course of 2020 and 2021, subsidizing consumers and deservedly so in a lot of areas of the economy were shut down. Instead of helping those people, we helped everybody. But if you look at housing prices, you look at equity prices, a lot of people were able to bank a lot of wealth, and as a result of that, that has really helped to power the strength in freight markets. And I think one thing that I didn't touch on my opening comment is that as we spent a lot of money in 2021 and 2022 on goods, and not so much in 2023. One other thing that also happened over the course of 2023, making the economy seem much worse for the for-hire trucking industry, is we did see a move of freight, or a market share gain on the part of private fleets, who were the net big buyers of trucks in 2023 relative to the for-hire guys. And if I can just go down the rabbit hole a second here, Jason, if we look at our models suggest that the U.S. Class 8 tractor fleet grew by about 4% in 2023. If we go and look at the publicly traded truckload carriers, those household name guys that you can go buy their stock on Wall Street, if we look at that group of, I want to say 12 carriers in aggregate, their fleets actually shrank by 4% year over year in the third quarter. So I think, being kind of representative of the overall market. If the biggest and best guys are reducing their fleets, and yet we have a 4% market share or 4% growth in the overall population of tractors in 2023. I think it really gets to the heart of that market share shift from for hire to private, or for hire to get dedicated, if you will.
Right, for sure. We've seen, going back to that, even the supply chain, right? We've seen that pent-up demand. The world shut down there in 2020 in a lot of ways. Trucks kept going, but clearly manufacturers put a pause on things for a little bit, slowed down everything. Demand kept coming back after 21 and 22. Couldn't pump out trucks fast enough. So now with that in mind, these the private fleets and for-hire fleets kind of jockeying there for market share. We're going into a new year, 2024. Let's break out the crystal ball. What do you see coming down the line next year?
Yeah, so we think that starting with our 2023 forecast, and I think on this call last year, I said we would do about 310,000 units in 2023. We also thought there was going to be a recession, which again did not occur, and as a result, we were roughly call it 10% light because it's early in the morning, and my brain is not engaged in math at this point. But we do think the Class 8 market, that there's a lot of as we move into 2024, there are a lot of puts and takes in the market. So after doing 333,000 units this year, our forecast is for right around 273,000 units in 2024, which I would say, if we look back historically, is an unprecedentedly good trough year for commercial vehicle demand, especially I should say Class 8 demand, because we do think there are a lot of like I said, a lot of puts and takes here. So as discussed, it is bad to be a for-hire trucker right now. Rates are beaten up. The load to truck ratio is very weak. There's just not a lot of traction in the market for those guys. But as the tractor market has been serviced, over the course of 2022 and 2023, addressing that pent-up demand, and I should say the domestic tractor market. If we look, there's the Mexican economy is crushing it right now. Onshoring is real, or nearshoring, or friendshoring, whatever you want to call it, and there's a lot of freight coming back to to the North American market right now. A lot of it landing in Mexico. And the Mexican market wasn't particularly well served in 2022 and 2023. So with a weak U.S. and kind of less weak but still weak Canadian tractor market, I think the industry is turning its attention down to Mexico. Additionally, I would say the U.S. and Canadian vocational markets have also been somewhat underserved the past couple of years. And if we look at the oxymoronically named Inflation Reduction Act, still gives me a chuckle. There's a lot of we actually have kind of a manufacturing policy in this country now, and that's is already now supporting a lot of commercial construction, and that's one of those gifts that keeps on giving. So vocational market pent up demand is real, and with the economy continuing to plug along, that's also a providing some nice support for helping to offset weakness in the U.S. tractor market.
Right, for sure. Lots to look forward to here. Looking forward to seeing if these predictions come true as well. Kenny, thanks for taking the time. You let me open my gift here early this year, because it's always a blast to talk with you and talk about the market. Thanks for taking the time. We'll talk to you again very soon.
Thanks, Jason. Have a great holiday season.